The market is pricing in a future that looks almost perfect. But when you dig into the data, there's a huge contradiction that could change everything.
Right now, traders are pricing in just a 2% chance of a US recession this year. That is an absolutely incredible level of economic certainty.
And believe me, this isn't just wishful thinking. There is serious money behind this conviction. We're talking nearly $16 million wagered on the Federal Reserve's December interest rate decision alone. The financial stakes are massive.
But here's the puzzle. This is the core paradox we need to solve. The market is 98% sure the economy will stay strong, yet it's also pricing an 83% chance of 3 or more rate cuts next year. Now, you cut rates to save a weak economy, not a strong one. So what is really going on here? If you're finding this valuable, drop a like and share this.
Okay, first, let's break down why the market is so absolutely certain we're getting a soft landing. The idea that the Fed can crush inflation without triggering a recession. This belief is built on some very specific data. So take a look at this. The contract for the Fed decision in December? Yeah, that 83% probability of a rate cut, that's the market basically screaming that the war on inflation is over. As far as traders are concerned, it's a done deal. And that optimism is really held up by these three main pillars. Traders are betting on an 85% chance that inflation stays below 3%, an 84% chance that job growth keeps going, and a 75% chance that GDP growth holds strong above 1.5%. This is the data-driven foundation for the market's entire rosy outlook. Make sure you subscribe to the YouTube channel to get these breakdowns first. So while the economic picture looks crystal clear, the political landscape is, well, it's a total mess. And this is where the market's certainty just evaporates and the real risks start to emerge.
Let's just compare these two markets directly. It's pretty telling. On the left, you've got near certainty about the Fed's next move. But look to the right. The question of who will even lead the Fed is completely wide open. A new Fed chair could just throw out the entire playbook that traders are so sure of today. That is a direct line connecting political risk right to your portfolio.
And this uncertainty goes even deeper. The market sees only a 1% chance of a change in the presidency this year. Okay, stability. But look ahead. Traders are already giving J.D. Vance a 51% shot at the 2028 GOP nomination. This tells you that while the present feels locked in, a huge political shift is already being priced in for the future. You should follow us on Twitter for more updates on these fast-moving markets.
Now, in the middle of all this economic calm and political chaos, there is one area where the market is placing a massive, completely one-sided bet. The conviction here is absolutely off the charts.
I mean, just look at these numbers. The market is giving Google's Gemini an 87% chance of being the best AI at the end of 2025. That's not a race, that's a coronation. They're essentially declaring the race over before it's even really started. And again, this isn't just an opinion. Over $9.7 million have been traded on this single outcome. This is what smart money looks like when it makes a high-conviction, winner-take-all bet. The sheer scale of that wager is a huge signal in itself. If you're getting value from this analysis, please drop a like and share it. All right, so how do we pull all of these different signals together? The economic stability, the political risk, the tech dominance. How do we turn that into a single strategic map? It really boils down to three key takeaways. First, the market's base case, its default assumption, is that the soft landing is real and the economy will stay stable. Second, the biggest known threat to that stability isn't economic, it's political. And third, the single highest conviction bet across all of these markets is the consolidation of power in big tech, specifically in AI. So to put it all together, the data paints a very clear picture of a stable economy that is directly threatened by future political shocks, while at the exact same time, a new technological king is being crowned with incredible certainty. And this leaves us with the critical question, is the market truly pricing in the potential for these political wildcards to completely derail the economy? Or is this massive confidence in a soft landing actually the market's biggest blind spot? The answer could define the next 12 months. If you found this breakdown valuable, subscribe for more.